according to recent PitchBook data, VC firms have poured nearly $20 billion into crypto startups around the world, with 616 deals through the first 9 months of 2022. Joining us now to discuss some of these key trends in crypto fundraising is Robert Lay. He's the Senior Emerging Technology Research Analyst at financial data firm PitchBook. Robert, thanks for joining us. Really interesting report considering we are in a bear market. What are some of your key takeaways?
Yeah, hi. Thank you so much for having me. Yeah, my first takeaway is what you just mentioned. There's still a lot of capital being deployed into this space. Almost $20 billion this year. And we expect that by the end of the year, it's going to surpass last year's record amount of capital that was invested. So what we're seeing is there's a few things that is driving that. First, another data point I want to show is that the amount of capital that crypto native VC funds have raised this year, they've raised $21.7 billion of capital. So all of that dry powder has to be invested over the next 2 to 5 years. So that's going to drive a lot of the venture funding. Even though if you look over the last few months and last quarter, that venture funding has declined. We do expect that decline to go into 2023, but at some point later in 2023, we expect it to go back up.
All right, so we'll see VCs have infused $1.5 billion into Web3 companies in third quarter, according to your data. What kind of crypto sectors are investors focused on?
Yeah, like you mentioned, so Web3 is one area that investors have deployed a lot more money over the last 6 months or so. So you're looking at metaverse, gaming, a lot of that area. What you have seen though, that there's been a shift away from centralized crypto services. So in the third quarter, we saw a negative 85% decline in investing in companies like exchanges, custodial wallets, crypto on-ramps. A lot of the centralized lending and borrowing services. And, it's not that surprising given what happened with Celsius and BlockFi over the summer. But even before the FTX collapse, investors were deploying capital elsewhere, away from these centralized crypto companies. So you're seeing blockchains is still, and this has been the story over the last year and a half, layer ones, layer two. We saw Matter Labs just raise a $200 million Series C just a couple of weeks ago. Celestia also raised a round in October, and they're a layer one blockchain as well. So a lot of infrastructure and a lot of gaming and metaverse are really the two core buckets that we're seeing a lot of investments.
Robert, nonetheless, I mean, you mentioned that there was already a shyness from investing in these centralized exchanges, even in Q3, and the collapse of FTX happened in Q4. It took a lot of smart money's investments with it. Of course, you had all these people like the Sequoias of the world putting money with FTX, and it looks like they might not get it back, or who knows what they'll get back years from now. Do you think that actually will create a cooling effect on this sector in maybe not this quarter, or at least at the second half of this quarter now, Q4, which we're almost finished with, but also Q1 and 2 of next year? Do you think that even though some of these new investments are going to these blockchains, nonetheless, that the willingness of people to kind of get into the sector while prices are falling, while there's all this uncertainty, do you think that that's going to maybe soften or cool off the market going forward, at least for the next couple of quarters?
Yeah, absolutely. That's part of our outlook, is that investments are going to continue to decline into 2023. You're going to really see a bifurcation. Over the last 18 months, everyone was investing in the crypto space, whether it's crypto native investors, hedge funds, crossover funds, family offices. You're going to see a lot of the non-crypto investors move away from this area. And then, so there's going to be definitely a contraction in investments from non-crypto native investors. And the space is technically complex. It requires a deeper level of diligence and understanding, like tokenomic design and running nodes and smart contract auditing. All that is going to benefit the crypto native investors. So the Paradigms and the Dragonflies and A16Z Crypto, they're going to continue to invest during this time, but then you're going to see a flight away from this area from all the non-crypto investors. And what is going to be a benefit. So if you're a crypto native investor, you're going to be able to find more opportunities, better valuations, and you don't have to compete with the Tigers and the Co2s and all these other investors.
So what are your predictions for 2023?
Yeah, ours. So, like I mentioned earlier, I think venture funding will continue to decline into 2023, but we're looking at some time in the second half of next year where venture investments will continue to increase. And we're being cautiously optimistic here, and there's a few signals that we're closely watching. The first is that if you look over the past 6 to 8 months, a lot of all the development has exposed a lot of the bad actors in crypto. Obviously, there's possibly a lot more. There's some headwinds, like Bob just mentioned in the previous segment, macro headwinds, Binance, Tether. So there's still a lot of headwinds. But if you look at who's using crypto now, retail, businesses, institutions, they're going to be much more vigilant now. So everyone will demand better risk management, greater transparency. We expect there to be more disclosures, financial disclosures, audits. Not really like the proof of reserve type audits, actually real audits are going to come out. This will create more trust in the ecosystem. And then that is when you'll have more users, more partnerships will start coming out again. I think all of that will give a little bit more confidence into the ecosystem. And then regulations is a big one as well. I think next year we're going to see more regulatory clarity. I think all the lawmakers who are now they're having all these hearings, they're trying to understand the crypto space better. And once they have better understanding, they can write legislation. I don't know. I don't think the DCCCPA is gonna, I think that might be dead, but maybe some parts of the Lummis and Gillibrand bill could be pulled out and some of that can become law. We expect the SEC to start actually writing crypto native rules. Not just going out and enforcing actions. I don't think that's good for the industry. So I think that, and combined with what's happening in Europe with MiCA, I think that would create a lot more regulatory clarity and that would bring in more participants into the ecosystem as well. So I think all of that holistically combined, we're being optimistic here, but I think towards the end of next year, you'll start to see venture funding tick back up.